Very good morning, everyone. Hope you all must be doing great. So today is day 4 for capital gains and IFOS also. So quickly start with capital gain first. See, as far as capital gain is concerned, there is no difference between optional regime and default regime. There is no difference in capital gains. So capital gain is one of the good chapter where there is no difference in optional and default regime. IFOS, there is a very little difference, but in capital gain, there is no difference between optional and default. But yes, the thing is that because by this budget 2024, this is the date which you should remember, 23rd of July 2024. See, because it's our previous year. Guys, is my video to everyone, it's clear? Is it stucking or it's clear and smooth? Clear and smooth, right? Okay. Thank you so much, Aditya. Thank you. Thank you. Okay. Now, see, please remember this date. You can write this date also somewhere. This is very important date. 23rd July 2024. This is the date when this budget was announced of this year 2024. Since our previous year is since our previous year is 24-25 and this date is falling in our year. So there are so many amendments which are made from this date, especially with regard to capital gain. With regard to capital gain, there are some couple of amendments which I'll be also covering today. So anything before 22nd of July, on or before 22nd of July, we will follow the old provision. But any capital gain which is arising on or after this date, we will follow the new provisions. Right? Please, first of all, write this. Our previous year is 24-25. So I'm breaking this year. I'm breaking this year into two parts. Any transfer which is happening between our previous year, 1st April 24 till 22nd of July 24. This we will call it as a pre-budget transaction. So any transfer, please write any transfer which is taking place during this period, April 24 till 22nd July. Pradeepa, I have just started. So I was telling you that 23rd July was the budget date and it's very important for us, specifically with regard to capital gain. So this we call, today we will call it as a pre-budget period. And any transfer which is happening from 23rd of July 24 and onwards will apply. I'll call it as a post budget. This is a post budget. Guys, it happens in election year. So every 5 years, after every 5 years, there is an election year. So 2024 was the election year. The government was formed again. So in that year, generally the budget comes once the formation of the government is over. So in the month of July, it came. That is the reason. In after every 5 years, we have a little bit problem that our period gets break into two parts. So here our period is breaking into two parts, pre-budget and post-budget. Guys, everybody understood it or not? First of all, date 23rd July. This is very important date. Everybody should be clear of this date. Very good. Very good. So I'll be telling you what are the amendments, so don't worry about it. But right now, you should always remember 23rd July. 23rd July is post-budget. 22nd July is pre-budget. Okay, let me start with question number 1, and side by side, I'll be telling you the concepts also and the amendments also. If you will look at it, this question says, Mr. Kalyan has a residential house property which was acquired on 12th of August 2005 for rupees 2 lakh. So this person has purchased a property in the year 2005. Quite an important question from examination angle also. The property sold for 22 lakh in December 24. So we have sold this property on December 2024. Guys, I want you to know, please tell me whether it is pre-budget or post-budget. Please remember 23rd July 24 and onwards, it's a post-budget. So everybody will agree that this is happening. So you should first of all identify. In your question, I'm telling you in May 2025, be very cautious. Please identify when your transfer is happening. Is it pre or post? So how will we calculating it? Don't worry about it. But first you should able to identify whether it is happening pre or post. So it is post. Very nice. Now, so we'll be applying the new provisions over here of capital gain. Now, what are the new provisions? You must be knowing that in case of long-term capital gain, everybody know what the indexation is. But post-budget, indexation is not allowed. Post-budget indexation is not allowed, even if it is long-term. So since we are selling post-budget, and it is obviously long-term, 2005 we have acquired, 2024 we are selling, but we will not be doing indexation. Had it been on, let's say if they would have given me that this has sold on 22nd of July 24 or before that, I would have applied indexation. So please write it over here. One of the difference in pre-budget and post-budget. The first difference is with regard to long-term capital gain. Pre-budget, we used to do the indexation. And the amendment is now, there is no indexation. So in this case, we will not be doing any indexation. So please leave this page. The first page, which I am writing it over here, we'll start the question from the second page, from your register also. Please start it from the second page, right? So in this page, I will be writing what was the difference between pre and post budget, correct? Both the regimes are same. So don't worry about the regime at least. Old and the new regime, the default regime is same as far as capital gain is concerned. Okay, now coming back. So we have sold it for 22 lakh. The sub-registrar refused to register the documents for the said value, as according to him, the stamp duty value based on the state government guidelines was 28 lakh. So we are selling it for 22, but the stamp duty value on the date of sale is 28 lakh. A very, very important section, of capital gain, section 50C, 50 capital C. Even if you don't remember the section number, I would request you to at least remember the provisions, which are very easy. And I believe that you must be knowing it also. And even if somebody has learned it earlier, now he or she is forgetting it, please revise it. Let me write it for you. Not on this page, start from the next page. Not on this page. Please don't disturb this page. Here we will be writing pre and post, right? So I'm coming to the next page. It says section 50C, a very important section of capital gain. Most of the time we see questions coming from this section. Section 50C is related to whenever you sell your immovable property. Guys, only immovable property, no other property. In other words, I can say that when you sell your land or building, land, building, or both, then this section is applicable. It's a very simple section. It says if your stamp duty value is more than 110% of actual sale price, then we will take your stamp duty value. If the answer is yes, SDV is more than 110% of the actual sale price. If the answer comes yes, it is more, then your full value of consideration we take as stamp duty value. But if the answer comes no, that SDV is not more than 110%, then the full value of consideration will become your actual selling price only. Have you understood till now? Tell me yes or no. Everybody is okay with this? 50C is only for immovable property, land or building or both. Very nice, very nice. Siddharth, Satish, Logita, Shagna, Kishore, Pradeepa. Very nice, Deepa. Stamp duty value is more than 110%. Here, tell me, in this case, stamp duty value is 28 lakh. If you look at it, the stamp duty value is 28 lakh. We are selling for 22 lakh. So what you need to do is actual selling price 110%. Even if you do the 110% or you simply add 10% to it, even stamp duty value is more. So we will be taking 28 lakh. So full value of consideration, we will not be taking actual selling price. It is yes. So stamp duty value would be the price for full value of consideration while computation. However, assessee has the right that he can actually challenge this value and he can request the assessing officer to appoint a valuation officer. So if a valuation officer is appointed, please keep on writing with me. If a valuation officer is appointed, why we appointed a valuation officer? Because the assessee was not happy with this value. He is saying that this value is too high. He is not happy. He was saying that your stamp duty value is too high. Please appoint a valuation officer, an expert. If valuation officer is appointed, but however, valuation officer brings a value more than stamp duty value, so it is now worthless to appoint a valuation officer. Why? We appointed a valuation officer so that he can give me a less value. But in case he is giving a more value, then we will say, no, sorry, sir. We don't need such valuation officer. So let us go with the stamp duty value only. So then the full value of consideration would be the stamp duty value. However, if the valuation officer is actually acting in our favor, how he brought a value which is less than stamp duty value. That is the reason the valuation officer was appointed, so that he can bring a value which is less than stamp duty value. In that case, we would be happy. At least he has brought a lesser value. So in that case, we will take the full value of consideration as the valuation officer value. However, it should not be such a less that it is going less than the actual price also. See, it should not go less than the actual selling price. If you will see in this question, my actual selling price was 22 lakh. Do you all agree? My actual selling price was 22 lakh. At least assessee was saying 22 lakh I have sold. So if the valuation officer is bringing such a value which is less than the actual selling price, he can't bring this. But in case he is bringing that, we cannot take that value. At least minimum it should be restricted to actual selling price, but not more than, but not less than actual, but not less than actual selling price. Everybody done and understood till here? Very nice. Very good. Now one more thing. We take stamp duty value of the registration date, but sometimes this stamp duty value can also be taken as, please write it here. Sometimes the stamp duty value can also be taken as the agreement date value. Agreement date stamp duty value. Sometimes we can take agreement date stamp duty value. When we can take stamp duty value, first of all, if there is a prior date agreement, if there is a prior date agreement, plus at least some consideration was paid on that prior date. Some consideration, not, I'm saying that not the entire money of the particular asset, but at least some consideration. Some consideration in banking mode, not through cash, guys, not through cash. It should be in banking mode. If there was some consideration through banking mode, then we can take the SDV of the agreement date as well. Correct? Guys, this is in total section 50C. This is in total section 50C. Quite an important section. I believe everybody has written this. Now let us come to our question once again. It says, now I'm reading it all together again. Kalyan has a residential house property acquired for rupees 2 lakh in 2005. The property is sold for 22 lakh. This is the actual selling price. In December 24, post budget, no indexation, the sub-registrar refused to register the documents. Why? Because the stamp duty value was more, and stamp duty value is more than 110% of actual selling price. Correct? Just add 10% on that. Still 28 lakh is higher. So we will take 28 lakh. Correct? Now, Mr. Kalyan preferred an appeal to the revenue divisional officer who fixed the value of the house as 25 lakh. Guys, now the valuation officer is appointed and he fixed the value for us as 25 lakh. Please tell me, everybody, now what is the full value of consideration? 22, 28 or 25? Very good, 25. Why? Because see, first of all, 50C is attracted. Guys, 50C is attracted or not? Just compare the stamp duty value and this. Guys, you never have to compare the valuation officer value with 110%. Everybody agree? Everybody agree? You never have to compare the valuation officer value with 110%. You have to compare the stamp duty value. Guys, if this would have been, let's say 23 lakh also, then some student might say, so this is 23 lakh valuation officer value and it is not more than 110%. So let us take 22. No, 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 no. You should compare the stamp duty value, right? Just once the stamp duty value is more, 50C is attracted. Forget about that 110%. I believe that everybody is okay. So we have to compare 110% with this value. Once it is there, 50C is attracted. Forget about 110%. Its role is over. Now we will look at the valuation officer value. Had the valuation officer value would have been 29 lakh, I would have taken 28. If it is less than 28, then I will take this value. If this would have been 21, at least I would have taken 22. I believe everybody is okay with this. So let us start the question now. Solution number 1. Okay, what we need to compute, I have not read what we need to compute. Compute his capital gain for this year. So we have to compute the capital gain for assessment year 25-26 and 26-27 also. I don't know why they are asking, but let us see. Till here we will be calculating. So computation of capital gain previous year 24-25, or I can write assessment year 25-26, and I will be writing over here post budget so that I should not make mistake. Should you write in examination also? Your choice. If you want, you can write. See, there will be no extra marks for that, but this will actually remind you that yes, this is post budget, so we have to apply the no indexation over here, right? So at least now you can write it. In your examination, if you want to skip this, you can skip, no issues. But if you want to write it, please write it. There is no problem in writing it. I would recommend write it. Okay. Now, full value of consideration. You will write 25 lakh. And guys, you have to intimate to the examiner, not in very big notes, just intimate to the examiner that why you are taking 25 lakh. So first of all, if you don't remember the section 50C, no need to worry, don't write it. But if you remember, you can mention. But if you don't remember, don't mention it. But please don't mention wrong section number, right? If you are 100% sure, then only mention the section number. Otherwise, skip the section numbers. But at least we know that stamp duty value is more than. How you should write it? Just see in a simple form. 110% of selling price. Stamp duty value is 110% of selling price. And valuation officer value is less. That's it. Therefore, we have taken 25 lakh. This is what you have to mention. No need to give a separate note. Just mention right here. Full value of consideration. Less. If this would have been pre-budget, I would have taken index cost of acquisition. But this is post-budget. So I will take cost of acquisition only. Cost of acquisition, cost of improvement, expenses on transfer. So we have acquired it for 2 lakh rupees. So cost of acquisition is 2 lakh. Cost of acquisition is 2 lakh. I will show this in negative. Then he acquired another residential house. He acquired another residential house for rupees 17 lakh for self-occupation on 1/3/2026. See. Sorry. He acquired another residential house on 31/3/2005 for 17 lakh for self-occupation. On 1/3/2006, he sold such new residential house for 30 lakh. Okay. So they are giving me some information about other houses. First of all, I got to know that there is no improvement cost, there is no expenses on transfer, right? So my capital gain is coming as 23 lakh. This is my long-term capital gain which is coming in. Now, you know, we can get certain exemptions also from capital gain. We know that there is certain exemptions from capital gain. Guys, on the next page, please write about the exemption. I would like you to revise those exemptions now. Exemptions under capital gain. These are not difficult. These are easy exemptions. We are discussing section 54 family. Right now we are doing a summary. We have exemptions like section 54. Just keep on leaving one line in between. Section 54. Then we have section 54B. Leave one line. Section 54 EC. Section 54 F. And not so important section, but section 54D as well. So actually we have 5 sections, but I tell you the first 4 are little important. 54D is not that much, but we can't ignore as well. What is section 54? If you can remember the section number, it would be good. In case if you don't remember the section number, guys, if in anywhere in your question 54 EC is applicable, you are applying 54 EC. But if you wrongly write the section number just 54, examiner will cut it. Examiner will cut it because 54 is altogether a different section. That is what I was saying. If you are 100% sure about the section number, go and quote the section number. If you are not that sure, no need to write the section number. Everybody understood this or not? So anywhere where you are applying 54F, but you are writing just 54, 54 is altogether a different section. So please don't do that. Instead, it's good that if you don't write the section number, that's okay, perfectly fine. Now, what is section 54? Section 54 is whenever the assessee transfers his residential house, he or she transfer his residential house and purchases a new residential house, then he gets 54. If the transferred asset is residential house and you purchase residential house and you have a time limit also almost 3 years to construct, or 1 year before, or 2 years to acquire also, to purchase also. So we have sufficient time limit. So here, please write that capital gain scheme is also applicable. Capital gain scheme is also applicable. CG scheme. 54B is when a assessee transfers his agricultural land, which they were using for at least last 2 years, not that important, but yes, if you sell your agricultural land, obviously which agricultural land you have sold? Urban, because rural agricultural land is not a capital asset. On rural agricultural land, there will be no capital gain. So there is no point in taking the exemption. Are you all okay with that? Rural agricultural land is not a capital asset. So we don't require exemption because altogether it is not a capital asset. There would be no capital gain. But if this is an urban agricultural land, then we require exemption. And if the assessee sells his urban agricultural land and purchases any agricultural land, This agricultural land can be urban or rural, that doesn't matter. Urban or rural doesn't matter. So you will get this exemption 54B. And here also you have 2 years time limit. CG scheme is applicable. In 54 EC, if you transfer your land or building, which is long term, if you transfer your land and building, which is long term, and here, if the assessee purchase bonds of National Highway Authority of India, NHAI, or Rural Electric Corporation Limited, or some other notified, but you should only remember these two. So this is investment in bonds. When you are investing, you have sold your land and building, so their capital gain is coming on land and building, and now you would like to take the exemption, so you can invest in bonds. And here you understand maximum it is 50 lakh exemption. Maximum 50 lakh is the exemption, and 6 months is the time period. And here is no CG scheme. CG scheme is not allowed over here. Why? Because unnecessary you will go and deposit in CG scheme. It is better to go and deposit in bonds. (54F), a very important section. 54F says that if you transfer your any of your long-term asset except residential house, any long-term asset including land also can be transferred, including land, except residential house, and you invest in residential house. See, you have transferred any other thing, but you are purchasing residential house. Then 54F is applicable. The time limit is almost same. You will get 3 years almost to construct. For purchase 1 year before, 2 years after, same like 54. Here CG scheme is applicable. CG scheme is applicable, and 54F you get exemption proportionately, formula based. So I'll be telling you, don't worry. So it is formula based exemption. It is formula based exemption. Proportionate exemption. It's a proportionate exemption. Guys, everybody has written till here. Very good. 54D not very important. 54D not very important. But if it is available to manufacturing assessee, you can call him manufacturing or industrial, doesn't matter. Same thing. Manufacturing or industrial. If land, factory, land or building, factory, land or building is compulsory acquired. If factory, land or building is compulsory acquired, then 54D is available, and we need to purchase factory, land and building or building. And again, you have time, 3 years. So CG scheme applicable. CG scheme is not applicable only in 54 EC. Otherwise, in remaining 450 capital gain scheme is applicable. What is capital gain scheme? If you are not able to invest within the due date of ROI, so at least because you have 3 years to purchase these residential house or other things. So if you are not able to purchase within those 3 years, so with up to the due date of ROI, because you have to claim deduction right here. So at least deposit this in the CG scheme. So I think that you must be having an idea of CG scheme. Guys, for you, for intermediate examination, we understand individual is important. So for individual, each deduction is available. But yes, 54 EC and 54D, they are available to any assessee. But yes, 54D is very, very restricted. Any assessee could be there, even company, partnership firm could be there, but they should be manufacturing assessee. 54D, not that important. In intermediate, mostly individual is important. And other sections, 54, 54B, 54F is only for individual or HUF. It is only for individual or HUF. So if you want, you can write it. This is only for individual or HUF. Okay. Now tell me the question which we were doing. Now tell me the question which we are doing. We have sold a residential house. In this question, we have sold a residential house property. If we want to claim the exemption, in case we would like to claim the exemption, tell me 54B is for agricultural land transfer. So we can't get 54B. 54F we can't get. Why? Because it says except residential house. 54D is not applicable because here it is for manufacturing concern, factory land and building. Guys, do you all agree that 54 and 54 EC could be allowed? Could be allowed? Chances of 54 and 54 EC? Yes or no? Everybody understood? Why 54? 54 is for residential house. And why 54 EC? 54 EC for any land or building. It is for any land and building. So there are chances of 54 and 54 EC. Now, if I tell you that the assessee has purchased another residential house, you will apply 54. If I tell you that the assessee has purchased bonds of NHI or RECL, not NABARD. NABARD is not there. Sometimes examiner confuse you that he has purchased bonds of NABARD and students give exemption of 54 EC. It is RECL NHI, correct? So if we would have invested in these bonds of RECL NHI, 54 EC would be applicable. Can I invest in both? If I have sold residential house, house I have sold, this condition is satisfied, this condition is satisfied. Can I invest some money in residential house here? Can I invest some money in bonds? Whether I will get the exemption both? Yes. Yes. The amount you have invested here, you will get the exemption. The amount you have invested here, you can get the exemption. So if in your question, the assessee has invested in both, you can give both the exemption. First, give one exemption, then see whatever is the capital gain which is remaining, and on remaining, give this exemption. Have you understood this also or not? So whether these two exemptions can be applied simultaneously? Yes. Possible. No issues. I'll be giving you homework of this. Possible. No problem. Now, in this question, he acquired another residential house on 31/3/2025. He has acquired another residential house. See, in this year itself, he has acquired residential house. How much? 17 lakh for self-occupation. So please come back to your question. He has sold a residential house. He's purchasing a residential house. Exemption. under section 54, how much is 54? Least of the following. Least of the following. A, B, C. Least of the following. A is my gross capital gain. Gross long-term capital gain. This is gross long-term capital gain. Why I'm saying it gross? Because now I will be giving them exemption. From this 23 lakh, we'll be giving them exemption. Gross long-term capital gain is 23 lakh. B is amount invested. Even if you have invested the amount in purchasing a house, that amount invested. If you would have invested the amount in capital gain scheme, that amount. Now my question is to you is, what you will do if they will say that up to the due date of ROI, he has purchased the house of 20 lakh and invested 3 lakh in CG scheme. He has purchased house also and invested in CG scheme also. Tell me how much exemption you will give. Here amount invested should be 23 or 23. What do you think? He has purchased the house also, new house, to take this exemption. He has also invested in CG scheme. Possible. Both he has done it. Tell me then how much amount invested which you will take in B point, amount invested. My question, option 1 20 lakh or option 2 23 lakh. What do you think? Your answer please. Your answer can be right or wrong, doesn't matter right now guys, but you should give the answer. Pradeepa is saying 23. What about others guys? Deepa, Kirti, Logita. Aditya is also saying 23. Correct answer. Correct answer is 23. Correct. Joseph, Logita, correct. So see, we can purchase the house also, and we might be constructing also, na? So, but we could not construct it within the due date. We need some time. So we can invest in both. Correct. Very nice. So amount invested, but here it is actually, we have purchased the new house for 17 lakh. So here amount invested is 17 lakh. C, 54 has maximum a fixed limit of 10 crores. 54 has a maximum limit of 10 crores. 54 EC has maximum limit of 50 lakh, 50. It has 10 crores. Whichever is lower, 17 lakh is the exemption. And 23 minus 17, my 6 lakh would be the long-term capital gain. Everybody has done it. So in this question, we have applied section 50C also and section 54 also. And this is my long-term capital gain. Guys, in this question, they are asking about only long-term capital gain or capital gain. I will stop here. Let's say in this question, they would also have asked me, which is important because of the amendment. In this case, if they have also asked me that compute the tax liability. Compute the tax liability. So today, come back to this page. Come back to this page. Write the second point between pre and post. What is the difference? The tax rate. The tax rate. We have section, one of the section 111A. What is 111A? It is short-term capital gain, not all short-term capital gain, only and only on short-term capital gain on equity shares or equity-oriented units of mutual funds. Mostly equity shares. This is 111A. On 111A, pre-budget, we had a tax rate of 15%. But post budget, now the tax rate has been increased to 20%. So any transfer which is happening till 22nd of July will apply 15% in 111A, but after 23rd July or onwards, on or after, 20%. Second, we have 112A, that is long-term capital gain on equity shares and equity oriented units. Earlier we have a tax rate of 10%, but now we have a tax rate of 12.5%. Here also it is increased. Earlier we had 10%. Now we have 12.5%. However, this 112A, these percentages we will apply in excess of 1,25,000. Because earlier there used to be a limit of 1 lakh only, but now it is 1,25,000. Now in pre and post, because this is an yearly limit, because this is our total yearly limit, so we will not take 1 lakh, we will give 125 because it's an yearly limit. So I can't say that pre-budget till 22nd July you will apply 1 lakh and then 125. No, for this now it's the yearly limit, so it will be 125 only. Then we have 112. 112 is all other long term, other than. So we have two long terms, either 112A or 112. These are long terms. So all other long term, this is called all other long term. We have a tax rate of 20% earlier. Now we have 12.5%. So actually what Mrs. Nirmala Sitharaman has done is she has brought the entire long-term capital gain at a fixed rate of 12.5%. But yes, in 112A, we get exemptions up to 125. Have you all written this? Okay. Okay. Now since indexation, see, when she has dropped this facility of indexation was a facility to the assessee. When she dropped this facility in the budget speech, so after the budget, then in the parliament, in next sessions, there was so much of chaos. There was so much of hue and cry. The opposition leaders were of the view that you should bring back this indexation because it's a facility which you are giving to the assessee. Now you are not giving. So there would be indexation facility should be brought back. She is very adamant. She said no indexation. She is of the view that now we have reduced the rate from 20% till 12.5%. So in this case, there would be no indexation. We are giving a benefit to the assessee that we have reduced the rate. But opposition leaders were giving examples that, see, if this person has purchased the house of this much, there would be indexation. Even with 20%, this rate would have been a beneficial rate. But without indexation, this is high. So they both were giving examples. And you know that these are just numbers and we can bring out any numbers. It's mathematics. Sometimes because of those numbers, 20% would be beneficial. Sometimes because of those numbers, 12.5% is beneficial. So there was so much of hue and cry, and every common man who were not even knowing indexation earlier. See, these indexation are something which a tax consultant should know, right? See, even a common man who was not even knowing what was indexation earlier, they get to know. They get to know that after this budget, they get to know there was so much hue and cry. In news everywhere, it is indexation, indexation, indexation. So finally, Nirmala Sitharaman has to bring back the indexation, but she is very smart. She didn't brought the indexation back. She said that while computing the capital gain, there will be no indexation. Again, I'm repeating. If you are selling post budget, she said, while computing the capital gain, there will be no indexation. See, we computed the capital gain without indexation, correct? While computing the capital gain, there would be no indexation. However, we are giving a benefit to individual or HUF. She brought a special provision. She brought a special provision for individual and HUF only. Why? Individual and HUF mainly are the vote banks also, right? You understand, most of the decisions are politically driven as well. They want to come back again as a government, right? So they can't actually upset the people of India as well. So she brought an amendment. So there is an amendment she brought for individual and HUF. She said, third thing, special provision. Special provision for individual or HUF. Only and only for land or building. Only and only for land and building, not for any other else. For anything else, let's say gold, paintings, drawings, sculptures, anything else, same new provision would be followed. No indexation, 12.5% tax. That's it. Only and only for land and building, only to individual HUF. She brought a special provision. She said, okay, because if a person is now selling their asset post budget, so let's say take your example. Guys, don't learn it. Take your example practically. Let's say you have purchased some property before. Let's say you have purchased some property in 2010, 2020, 2021 or so. You are not knowing now that whenever I will be selling it, there would be a long-term capital gain, indexation would be there. Correct now. Because if you have purchased it before, so before indexation was a very, very long time affair. So it's been ages now that this indexation was applicable, and everybody knows that in long-term capital gain we used to get the indexation facility. So anybody who has purchased the property, land or building before the budget, so we had in our mind that indexation would be available whenever I'll be selling it. Say yes or no. If you or I have purchased anything before, so because indexation was there for ages, so we had in mind that whenever I'll be selling it, indexation would be benefit. Yes or no? No? Yes, no? Correct. But now on 23rd July, there is a bombarding. Now they said that there would be no indexation. There would be no indexation. So I would be upset. I would be upset. Now please tell me, if somebody will purchase this property on 23rd July or onwards, now they have in mind now that now there is no indexation. Agree now? So if today is 29th of March 25. Guys, today if you purchase a property, guys, now you know that even if it is after long term, I will be selling it after 2 years, then in that case, you know that now there is no such indexation facility. Yes or no? Again, tell me yes or no. Today, if you purchase, that is post budget. You know that now there is no indexation. Correct. So indexation is not for those people who are purchasing post budget. This special provision brought to for those people who were having in their mind that indexation facility would have been applied whenever I would be selling it. I believe that you got it. So special provision is only brought only for individual or HUF, not for anybody else. Only in case of land and building. She said such individual or HUF, if they had in their mind indexation, how they were having in their mind? Because they have purchased this land building pre-budget. and now they are selling it post budget. So for them, we are bringing this amendment. For them, we are bringing this special provision. Guys, this provision is very important. I'm spending some time over here. This is an important provision. You can expect question from here. If you have, again, I'm repeating, individual HUF, special provision only in case of land building, not for anything else. If you have purchased pre and you are selling it after, post budget, then it says, now you are selling it post, right? So I'll be writing over here in post. Only for the purpose, see, computation will be done your capital gain. If somebody will ask you your capital gain is this. Only for the purpose of paying taxes. This special provision is only for the purpose of paying taxes. I'll repeat 3 more times. This special provision is not for computation of capital gain. Computation of capital gain would be without indexation. But while you pay your taxes, this special provision is there. I'm repeating again. Intentionally, I'll repeat 2, 3, 4, 5 times. Only for the purpose of paying taxes. I'll repeat it again. Only for the purpose of paying taxes, we are giving you choice. We are giving you choice that you can pay your taxes like this. First, choice 1, or I can say option 1. Choice 1 is pay taxes normally without indexation. 12.5% tax. Without indexation, 12.5% tax. Choice number 2. With indexation, 20% tax. With indexation, 20% tax. Guys, it means that if the question comes in our examination only for capital gain, then we will stop here. No issues. But if the question comes that compute the taxes also, so first we need to compute normal capital gain without indexation, tax rate 12.5%. Tax rate 12.5%, this would be done. Then again, we have to find out choice number 2 amount also. Again, I'm telling you, only for the purpose of paying taxes, I am doing it. Only for the purpose of paying taxes, I am doing it. Only in case of land and building, only in case of individual HUF who has purchased pre-budget and who has sold post-budget, we would be taking choice number 2 also into consideration. Now what we need to do is, first we will recompute. Why recomputing it? Only for the purpose of paying taxes. So first I'll be recomputing it with indexation, and then I'll be seeing that what is my capital gain long term, 20% I will apply over there. Have you got a little idea of it? I'll be explaining it with that question also, don't worry. So have you got this little idea? Very good. Can I ask you one question? Now I'm asking you one question, guys. Very good. I'm asking you one question. Let's say, see, without indexation, obviously, our computation would be, the original computation should be without indexation. I'm selling it post budget. Let's say, don't write it. Just answer me, right? Let's say without indexation, your capital gain, long-term capital gain of the assessee is coming as 5 lakh. His long-term capital gain is coming as 5 lakh. Into 12.5%, the taxes would be 62,500. This is choice number 1. Correct? This was choice number 1. Choice number 2, we will recompute first of all after indexation. And because of indexation, my cost would be increased. Let's say my cost is increased so much that my choice number 2, after indexation, I'm getting a long-term capital loss of 2 lakh. I'm getting a long-term capital loss with indexation. See, with indexation, you understand cost will be increased. So I got a loss of 2 lakh. Obviously, on loss 20%, the tax would be 0. My first question to you is, how much the assessee will pay? Assessee is the individual or HUF, land and building. How much assessee will pay the taxes? 62,500 or 0? My first question. First easy question. 62,500 or 0? Pradeepa, 0. 0. Because it's a choice now of paying taxes. It's a choice of paying taxes. Shagna, Joseph, correct? Pradeepa, it's a choice now. Correct now? So obviously, because this is what the benefit of this paying tax, only for the purpose of paying taxes, the assessee will pay 62,500 or 0, whichever is obviously lower. So whichever is more beneficial to him, 0. Everybody is okay with this. Now, the assessee is saying, let's say he has another long-term capital gain on gold or other thing. On gold, we will not give him choice. Let's say on gold also in this year, he has sold it gold and he has a capital gain of 10 lakh. He has a long-term capital gain on gold also on that. Apart from this, now he is saying, sir, please set off my 2 lakh loss from this 10 lakh. Yes or no? Can it be set off or not? Can it be set off or not? He's saying, sir, please set off this loss also. Can it be set off or not? Say yes or no. Joseph, Satish, Aditya, Gomti, your answer is correct. Why you are saying no? Tell me why you are saying no. Your answer is correct. I want the reason. Very nice. And you know the reason also. Tell me why you are saying no. Your answer is perfectly correct, guys. I'm happy. Why you are saying no? Give me the reason. I have repeated it many times. What I have repeated? Tell me the reason. So this is actually very, very good, Kirti. Very, very good. So this provision is only for the purpose of paying taxes. And because of this indexation, very good, Joseph. And because of this indexation, if you are having a loss, then this loss cannot be set off or carry forward. Correct, Shagna. Right? Everybody understood? So such loss cannot be set off or carry forward. Guys, if you want to make it this example, so I will not be writing it again. So I have to cover other things also. If you want to write it right here, you can write it. Let me know once done. Done? Good. Shagna, in this last 1 hour, is there any chance when my screen gets blurred or it was clear entirely? All clear. Okay, good. That's what I'm asking. Actually, I made some changes to the settings. So I was just confirming it. So yesterday, actually, I had a major issue. I have to cancel all the classes. So there was some issue with the Zoom and OBS. Okay. Very good. Thank you, Shagna. All done now? Okay. Now let us complete this question, guys. This says he acquired the new residential house for 17 lakh. Guys, now if you remember, you get 54 exemption. But you should, there is a lock-in period. The new asset which you have purchased, you should keep it for at least for 3 years. Otherwise, if you will transfer this new asset, how you have claimed this exemption? If you will transfer this new asset before the expiry of 3 years, then we will withdraw your exemption. Do you remember this? That we withdraw your exemption if you have transferred this new asset. So what he has done is, he purchased this asset on 31/3/2025. Correct? This was the asset which he has purchased for 17 lakh. So there is a lock-in period. So from this date, there is a lock-in period of 3 years. So you should at least hold it till 31st March 2028. You should not sell it. So you should hold it till 31st March 2028. If you will sell it, then we will withdraw your exemption. So in this case, actually now it is written that on, look at this, on 31st March 2026, see before this date, on 1st March 2026, he sold such new residential house for 30 lakh. He sold it. Now, the exemption we have given, now we are going to withdraw it, right? So what we will do, first of all, here capital gain will arise. Why? Because here he is selling his property. So what is this year? This is previous year, 25-26, correct now? This is previous year 25-26. That is assessment year 26-27. So that is the question is asking, that is why the question is asking of the capital gain in 26-27 also. So in this case, in previous year 26-27, in previous year 25-26, that is assessment year 26-27, there would be one more capital gain. Why? Because we are now selling the new asset also. Assessment year 26-27, that is previous year 25-26. The new houses sold. I'm writing it over here. New houses sold. The new houses sold. How much is sold for? 30 lakh. Full value of consideration. Full value of consideration. Look at the, it got blurred. Give me a moment. Is it breaking for everybody? Oh, Gomti also. Is it breaking for everybody? Shagna is saying switch to gallery view and then to normal. Correct, Logeta. this is actually a problem I noticed. Actually, yesterday we tested it many devices. We tested this here at my office at many devices, and in one of the phone actually it was coming like this, but other phones was all okay. So we again tested, so it was a little bit issue, although that was also a new phone, but in one phone actually it was coming like this. So we have done the same thing which Shagna has told us, gallery view and then to normal, and then it was all right. So it was a problem, although that was also a new phone, but I don't know why it was showing like this. Okay. Okay, now full value of consideration 30 lakh less. Guys, this new house we have purchased it on 1 March 2026. Sorry, we have purchased it on 31st March 25. Look at this. We have purchased it on 31st March 2025 and we are selling on 1/3/2026. Tell me, it's a long-term capital gain or a short-term capital gain? It's a long-term capital gain or a short-term capital gain? It's a short-term capital gain. Okay, good, 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 good. We are selling it within 1 year. Okay, let me write this also, guys. The difference in pre-budget and post-budget. Difference number 4. I was telling you now we need the entire page. Look at these different differences. So point number 4, holding period. Holding period, pre-budget and post-budget. See, 4 assets have holding period of 1 year only. Listed listed securities, equity oriented units of mutual funds, units of UTI, which is not that important, units zero coupon bonds, which is not that important. Only the important point is listed securities. For examination purpose, please concentrate on listed securities. Any listed securities or zero coupon bonds. The remaining 3 is not important, guys. The remaining 3 is not important. The first one is only important. For them, it was 1 year. Pre-budget also. And post-budget is also same. Post-budget is also same. For listed securities, after 1 year, it becomes long-term. We take 1 year. Now, for all other assets, actually earlier we used to take 3 years, but now it is 2 years. Earlier we used to take 3 years, now it is 2 years for every other. Now there is no concept of 3 years, but earlier there was also a concept for 2 years. Earlier it was there, not now. Earlier 2 years was there for land and building and unlisted shares. It was 2 years earlier. After 2 years, land and building used to be long term. But for all other assets, it used to be 3 years. But now it is quite easy. For everything else, it is 2 years. Have you understood this also or not? So today, post budget, and guys, I'm telling you, 99%, 99% are the chances that they will ask you questions related to post budget only. See, now because pre-budget is now old provisions. Now, institute would like to make you aware regarding the new provision, because now new provisions are being followed. So generally, whenever there is a election year and whenever there is examination, it is seen that they don't ask generally the provisions related to old provisions. So whatever the old provisions I am discussing, although I am writing you to just make it aware, but otherwise I am telling you 99% of the chances that they will ask you about the new provisions only. Understood? So now it is only for these 4 assets 1 year, and for all other assets it is 2 years. So if it is more than 2 years, exactly 2 years short term, more than 2 years long term, right? So guys, everybody now again tell me, we have sold listed securities, equity-oriented units, units of UTI, zero coupon bonds. No, we have sold other things. So what we will see, 2 years. So that is the reason I was asking that whether it is short term or long term. So we are selling it before 2 years, in fact. So it is a short term capital gain. So 31st March 2025 we have purchased, 1/3/2026 we are selling. It is within 2 years. That is a short term capital gain. And how much it is for? Come back. Less cost of acquisition, 17 lakh we have purchased. But what will happen is, actually this is a new asset, new house, where we have taken the exemption also with respect to this house. But now the exemption which we have claimed earlier will be withdrawn. Why? Because we are selling it before 3 years. So 54, one of the condition of 54 is that the new asset which you are purchasing, please hold it for next 3 years. Don't sell it. But you are selling it, so exemption will be withdrawn. So your cost will be reduced by the exemption claimed earlier. We will not take your cost as 17. Your cost will be reduced. Your cost will become 0. Everybody understood this? Why I have reduced cost? Anybody needs explanation on it? I will explain. Do you all know that why I have reduced my cost? This is actually the exemption is withdrawn. Why? Because the exemption is withdrawn because we are selling it, this asset, before the expiry of 3 years. So 30 lakh minus nil. 30 lakh is short-term capital gain in this year. Everybody done? Okay, although it was just a one question and it was a small question, but the thing is that I was explaining you other concepts also. So that is the reason I'm taking time. Otherwise, guys, this question to do this question in your examination, you should not take more than 5 minutes. More than 5 minutes, you should not take. I'm telling you, it's a 5 minutes question. You will take only this much time. Okay, let us come to next question. Question number 2. It says, RN, a resident individual, age 58 years, sells unlisted shares in a private sector company on May 17, 2024 for 10 lakh. Guys, please tell me that he's selling it pre-budget or post-budget. He's selling it pre-budget or post-budget? Pre-budget. Correct. Correct. And these were unlisted shares. These were not listed shares. These were unlisted shares, right? For listed shares only, we have the concept of, I'll be also be telling you, the concept of 111A or 112A. Equity shares, these are all listed shares. 111A, where it is sold on stock exchange. That is called 111A or 112A, where you pay STT. But these are unlisted shares. These sections are not applicable on them, right? So we have sold unlisted shares of a private company for 10 lakh pre-budget. The shares were bought on 1/8/2012 for a consideration of 2 lakh. Guys, tell me, long term or short term? We have purchased it on 2012. We are selling it for 24. Obviously, it's been somewhere about 10-12 years. So obviously, it's a long term. And whether indexation would be there or not? Yes. Whether indexation would be there or not? Yes. Indexation would be there. Yeah. We have purchased it for 2 lakh. Okay. RN paid brokerage of 12,000 on shares. Okay. So it's expenses on transfer. Guys, please remember, although it is not listed, but in listed shares also, if brokerage is paid, expenses transfer is there. It is regarded as expenses on transfer. But if it is STT, guys, in capital gain, if the assessee has purchased securities transaction tax, it is not allowed as expenses on transfer. STT is not allowed in capital gain. We don't allow STT in capital gain. We allow STT only in PGBP. As a PGBP expense, it is allowed, but as a capital gain, we don't allow. So when you are computing capital gain, please never allow STT. At the time of purchase, if you have given STT, or at the time of sale also, please don't consider it. But at the time of purchase, if you have given brokerage, it will become part of your cost. Because at the time of purchase, whatever you incur the money, that becomes your cost. Brokerage you have paid at the time of sale, it will become your expense on transfer. Are you clear with this? Are you clear with this? Brokerage is your expenses. STT is not your expense in capital gain. Okay. Now, we have sold it for 2 lakh. RN paid brokerage. He deposited 5 lakh in CG scheme. Okay. On 56/2025, before the filing of return. Sorry. He deposited 5 lakh in capital gain scheme on 15/6/25 before the filing of return. On 30th April, he withdrew 4.5 lakh. So he deposited 5 lakh. On 30th April 26, he withdrew 4.5 lakh and purchased a residential house. He purchased a residential house in Delhi on 1st May 2026 for 4.5 lakh. CI is given. Ascertain the amount of capital gain chargeable to tax in this year. Second point would also be there, but right now we are concerned with this. So we need to compute the capital gain. First of all, tell me what he is selling: unlisted shares. And he has actually deposited the amount in CG scheme also, so that he can purchase a residential house. He's selling long-term equity shares, unlisted shares, although that's okay. And he would be purchasing a residential house. He has invested in CG scheme. Guys, can you please tell me, out of these 5, is he eligible to claim any of the exemption? Is he eligible to claim any of the exemption? Check one by one. 54, no, because in 54 he should have transferred residential house, but he has transferred shares. No. 54B, agricultural land, no. 54EC, land and building, no. Obviously 54D, no, because that is for manufacturing concern. Okay. 54F, Shagni is saying 54F. Okay, let's see why she is saying this. Any long-term asset, including land, any long-term asset. Guys, whether this condition is satisfied? Yes. Whenever you transfer any long-term asset, so it was any long-term unlisted shares also? Yes. Except residential house. Okay. We have transferred shares long-term. Okay. And what we will purchase? Residential house. Capital gain scheme is also applicable. Everybody is okay with 54F. Everybody is okay with 54F. Very good. Very good. Very good. Very good. Logita, Joseph, Satish, Aditya, Pradeepa, Shagna. Very nice. Let us first compute the capital gain. Start with me. Question number 2. Computation of capital gain. Computation of capital gain. This is previous year, 24-25. Assessment year 25-26. And this is pre-budget. Full value of consideration. We are selling unlisted shares. We are selling unlisted shares. A resident individual shares, unlisted shares, he is selling it for 10 lakh. He has purchased it for 2 lakh, and we have to do the indexation also. CI was 363 for this year, and for that year it is 200. Okay, 10 lakh, 2 lakh CI, 200. Full value of consideration is 10 lakh. Less index cost of acquisition was CI of the year of transfer, 363. CI of the year of acquisition, 200, into cost of acquisition, 2 lakh. 363 divided by 200 into 2 lakh. 3,63,000. Guys, if this would have been post budget, I would not have done the indexation. And there is no choice also of paying taxes, because that choice is only for land building. It shares. Got it? 363. Improvement is not there, but expenses on transfer is there. $12,000. So my capital gain is coming as 6,25,000. This is gross long-term capital gain. Correct, Aditya. It's a gross long-term capital gain. Now, less exemption under section 54F. Yes, 54F is a formula-based exemption. First of all, tell me. It's very easy. Don't learn that formula. Don't learn that formula. Tell me how much money right now this assessee has with him. Right now. Tell me whenever he has sold this share. Everybody tell me how much money he has it right now. How much money he has right now. Let's say it's you. Let's say it's your case. You have sold shares for 10 lakh. You have purchased it for 2 lakh earlier. Index is this. Expenses on transfer right now, your selling expense is 12,000. What do you think how much money you have right now? What do you think how much money you have right now? Pradeepa, 625 is actually the profit. Right now in your bank account. Because of this transaction. See, This 2 lakh you have actually spent in 2012. This 2 lakh you have spent in 2012, right? And this is actually index also. But right now it's not your outflow, right? This outflow was in 2012. So right now, very good, Satish, Joseph, Shagna, Aditya. Right now, you got 10 lakh rupees. You have 10 lakh rupees in your bank account. But since there is some expenses on transfer, 12,000 rupees, this is the outflow of right now. So you must be having 9,88,000. Pratibha, got this? This is called net consideration. This is called, so whenever I say that how much money you have right now, this is actually called net consideration. What is net consideration? The selling price, full value of consideration, minus expenses on transfer. This is called net consideration. So 54F says that you have 9,88,000 right now. In denominator, we take net consideration. So I'm directly writing 9,88,000. 54F says that out of this 9,88,000, how much money, see, you have 988. How much money you are investing? How much money you are investing? So he deposited 5 lakh in CG scheme during before the due date of this year. So out of this 988, this person has invested only 5 lakh rupees. So he will get the exemption proportionately. Everybody is okay with this? Numerator, how much amount you are investing? How much amount you are investing, guys? And in 54F, this amount invested should be maximum 10 crores. You cannot take more than 10 crores. And what is this 988? It is net consideration. Right now, you can write it. I would have also given you the formula, but this is better that if you will learn this way, that what it is. Out of 988, which you have in your bank account, you have invested only 5 lakh rupees into capital gain. 6,25,000 into capital gain. This is capital gain. So the formula is actually amount invested upon net consideration into capital gain. And in case in your examination you will get amount invested is more than 10 crore, please don't go beyond 10 crores. In numerator, you cannot keep more than 10 crores. How much it is? $3,16,000. 3,16,296. Okay. 295.5. I can take 296. That's okay. Correct, Aditya. This is 54F exemption. So he has actually deposited this money. He has not purchased the house, because for purchasing the house or construction for the house, he can get maximum 3 years for construction. For purchase 1 year before, 2 years after, but generally take 3 years for construction maximum. So we will say, okay, if you are not able to purchase or construct within this period, at least up to the due date of ROI, deposited in CG scheme. He deposited it. And he has taken the exemption also. 6,25,000 minus 316,296. 3,08,704 is long-term capital gain. Everybody done? Now, this person has to purchase out. If the question will stop here, we'll stop here. We need to compute the long-term capital gain. Guys, actually investing in capital gain scheme is for the temporary purpose. It's just for a temporary purpose, that since, see, your main purpose was that you should see, this is the main purpose for 54F. You should actually invest in residential house. This was the main purpose. Capital gain scheme is just for a temporary basis. Why? Because we are saying that because we are giving you so much time limit to purchase the house or construct the house, 3 years for construction, next 3 years for construction. But if the assessee will say, sir, okay, sir, but this year I'm getting a capital gain, I want to claim exemption right now. That is the reason we have given him a capital gain scheme facility. It's a very temporary facility just for the temporary purpose. But ultimately, you have to actually use this money in residential house. How much money you should use? How much exemption we have given to you? This much. Why we have given you this much exemption? Because you are promising that you will be using 5 lakh rupees, the 5 lakh money which you are depositing in CG scheme. You are promising that I will use this money in my residential house. Guys, if you will use this money, 5 lakh or more than 5 lakh also, then we are okay. We don't have any problem. But the problem is, if you don't use this money, or even if you use this money, but less money you use, so then we have a problem. Why? Because you have promised, sir, at least 5 lakh rupees I am depositing in CG scheme. Okay. So on your deposit of 5 lakh in CG scheme, we have given you exemption. We have given you exemption. Now it is your responsibility that within those 3 years, you should use this money. Guys, now what he did is that he deposited 5 lakh in CG scheme. See, he deposited 5 lakh in CG scheme account on 15/6/2025 before filing the return of income good. On 30th April 26, he withdraw 4.5 lakh and purchase a residential house. So how much he withdraw? 4.5 lakh and purchase the residential house in Delhi on May 1, 2026. So April he withdraw, he purchased 4.5 lakh rupees of house for 4.5 lakh only. Now this question is over, and first point we have already calculated. Next point, what is the tax treatment of the unutilized amount? They are asking me, what is the tax treatment of the unutilized amount, and also mention the year. Guys, now what we will say? We will say that 50,000 rupees you have not used it. Out of 5 lakh which you were saying, 50,000 rupees you have not used it. So we will withdraw the exemption. We will withdraw the exemption. Everybody agree with me that we will withdraw the exemption? First of all, everybody agree with me that we will withdraw the exemption? Okay. Now understand. Guys, see, practically understand. He has almost 3 years to construct this house. Even he can purchase a semi-built house and he can construct it also. So we will give him at least 3 years. We will give him 3 years time period for construction, right? Sometimes it's not like that he has purchased it, so we should give 2 years. No. Maximum time period we will give him 3 years. 3 years from where? 3 years from the deposit of CG scheme? No. 3 years we count from the original capital gain when it was arises. So original capital gain arises on May 17, 2024. We will give him total 3 years. We will give him total 3 years from the date when this capital gain arises. So we should give him time limit till May 16, 2027. Anybody has doubt over it, please ask me. Everybody understood? We will give him 3 years. Although in between he has withdrawn the money, 4.5 lakh. So will I say before this date, no, boss, you have withdrawn the money only 4.5 lakh, 50,000, why you have not withdrawn? He might have told me, or he might say to me that, boss, I will 50,000 rupees, I have kept it for construction. I will be constructing also. I will be constructing one more room also on this house. So we have to wait till 3 years. Everybody is okay with this date also? Correct? May 16, 2027. See, May 17 to May 17 is not a date. Now 1 year gets over from May 17 till May 16. So till May 16, 2027, Is everybody's okay with this date? Good. Good. Guys, please be clear. We will not count the 3 years from when he invested in capital gain scheme. So if you will count from the date of capital gain scheme, then you are giving him more benefit. See, on this date, his capital gain arises. He will invest the money on 31st July. Let's say 31st July is the due date. Then you will give 3 years, more years. He will get so much of benefit. No. From the date when your capital gain is arising, we are saying that you are now 3 years to construct this house. Now, see, in between, he has withdrawn 4.5 lakh and thereafter the question is stopped. So it means that 50,000 is now unutilized. 50,000 is now unutilized. And in this year, when this period will expire, this 3 years period will expire, can you tell me the previous year? Everybody is okay with previous year 27-28? And this is the date in previous year 27-28? In this previous year, your 3 years is expiring and you are not using it. And the question is asking that, please tell me the treatment in the year when these 3 years are expiring of the unutilized amount. So in this year, we will withdraw the exemption. Guys, how much would be, what do you think that how much is the exemption which will be withdrawn? Out of 5 lakh, 4.5 lakh he has used it, 50,000 he has not used it. Tell me how much exemption will be withdrawn. Everybody tell me. So now, in previous year, 27-28, assessment year, 28-29, 3 years period is expired. And amount unutilized is rupees 50,000. Guys, which exemption you are withdrawing? Tell me under which section you have given the exemption. 54F, right? 54F is not a direct exemption, it's a proportionate exemption. Can you tell me, we have given him how much exemption? Please tell me, it's in front of you. Tell me how much exemption we have given. It's in front of you. Everybody tell me how much exemption we have given to him. $316,296, correct, Shagna. 316,296. Okay. Guys, what do you think? What should be his correct exemption? What do you think that his correct exemption should be? How much? It is not correct now. Now 3 years has over. Let's say, what do you think? How much should be his correct exemption? You tell me. What do you think that how much is this correct exemption? You will change this. Agree now? You will change this 5 lakh rupees. Guys, you will change this 5 lakh rupees. You will change this 5 lakh rupees by how much? 4.5 lakh. You will say 4.5 lakh is my correct investment amount. So if this numerator would have been 4.5 lakh, everybody is okay that the correct exemption should have been 2,84,665. 4.5 lakh divided by 988 into 625. Tell me how much extra exemption you have given to him. Tell me how much extra exemption you have given to him. Just tell me the difference. So I believe Satish has given me 31,630. Almost rounding off. 316,330. Everybody is okay? 316,330 is the extra exemption you have given. Guys, my point over here is in 54F, very important, 54F, we give you exemption on proportionate basis. We take exemption also on proportionate basis. We take exemption also on proportionate basis. So it is not 50,000, it is 316,330. So what you can do is, see, this is the exemption you have given. The correct exemption would have been 4.5 lakh divided by 988 into 625. This is the correct. So how much extra you have given? This minus this, this minus this. So mathematically, see, this denominator is same, 625 is same, 5 lakh minus 4.5 lakh. So simple, we have the formula. Simple, what we can do is mathematically, exemption withdrawn. Can I write amount unutilized in numerator? 50,000 divided by 988 into my capital gain was how much? 625. $31,630. This is my withdrawal of exemption. This would become my LTCG. Earlier we have saved our LTCG. Now we have LTCG 31630. Everybody understood? Not 50,000 guys. It was not a direct exemption. It was a proportionate exemption. Everybody is okay with this? See, it was 5 lakh in numerator now. Everything was same. And minus, this was extra. Minus in numerator, it was 4.5. Everything was same. So if everything is same, 5 minus 4.5, 50,000. So this would become LTCG in this year. Have you all understood this also? All okay with this? Guys, please write an important section. Section 50CA. This is also important. 50CA. 50CA is on only for unlisted shares. It is only for unlisted shares. If fair market value, if the market value guys, only for unlisted share, nothing else. If the market value is more than selling price, not 110%, just see 50C was for immovable property. Almost the same thing is told by 50CA also. If the market value is more than actual selling price, then please take full value of consideration as market value. It's a very small section, but important. Only for unlisted shares. If the market value Deepa, happy birthday to you. Everyone can wish Deepa happy birthday. Deepa, yes, you can leave today. You can see the recording. So today in the evening or tomorrow, if you want to see early in the morning, you can see the recording, right? No problem. Happy birthday once again. Okay. Oh, wow. Okay, now. How do you send this? I don't know how to send these. Let me see. I don't know. Okay. Now, this was 50CA. Everybody back. Guys, there is one more section although no need to remember the section number 45.2. This is conversion of capital asset into stock in trade. Conversion of capital asset into stock in trade. Very nice, Deepa. Now, yes, you can leave, Deepa. You just see the recording in the evening or tomorrow in the morning or week tomorrow, right? Conversion of capital asset into stock in trade. See what happens is, let's say it was a capital asset earlier and you are converting it into stock in trade. So this is also regarded as transfer. It is also regarded as transfer. So let's say, please write with me. Everybody keep on writing with me. So what happens is, let's say on 1/7/2021, this person has purchased gold of rupees 10 lakh. Keep on writing with me. If this person has purchased gold of rupees 10 lakh, it was a capital asset earlier. It was a capital asset earlier. Let's say he has converted this on 15/12/2023. He converted into stock in trade. Guys, here we call it transfer. We call this transfer. So here the capital gain should arise, but this is 45.2 is a very special section. We say that we will not arise the capital gain here. Now from this date, you will agree that now from this date, it has changed into a stock in trade. He has converted this into stock in trade. So now it has changed into stock in trade from this date. Now, let's say it is sold on 15/9/2024. Actually sold on 15/9/2024. Let's say for rupees 35 lakh. So guys, what we are selling stock. We are selling stock. So here PGBP income will arise. We are selling stock. So here PGBP income will arise. All okay with this? PGBP income will arise because we are selling stock. How much you have earned in the entire transaction? See, we have sold it for 35 lakh. We have purchased it for 10 lakh. So in the entire transaction, you will say that 25 lakh we have made the profit. But actually, this profit comprises of this green line also. See, from here 10 lakh you started, green line you passed, and then red line started, and you come to 35. So total you traveled 25 lakh, 10 till 35, 25 lakh you traveled. But till here, it is capital gain journey. And from here, PGBP journey started. Everybody is okay with this, my words? From here till here, it was capital gain journey. And till here, it is PGBP. Everybody is okay with this? So what we need is, question will tell you that what is the fair market value on this date. Question will tell you the fair market value on this date. FMV, let's say the FMV is 31 lakh on this date. FMV is 31 lakh on this date. So now there is a break in between. So till here it is capital gain. So you can tell me 31 minus 10. 21 lakh is my capital gain. 35 minus 31. 4 lakh is my PGBP. So total 25 lakh is split into two parts. And it will arise here. So please write capital gain, although transfer year is 15/12/2023, that is previous year 23/24, but taxable in previous year 24/25. Why? When it is actually sold, and was sold on 15/9/2024. Everybody has made it or not? Very good. It will be taxable in this year. So what will happen is, in previous year 24/25, in this previous year, my capital gains would be full value of consideration would be how much? The fair market value, 31 lakh. The fair market value on conversion minus okay, for Logita it is coming. Guys, for others also it's same, or it's only for Logita? For others, I think it's Logita. For others, actually, it's correct. It's only for you. I believe might be internet issue at your end, or have you tried to refresh it also? What Shagna was telling. Shagna is saying try that gallery view option. She did it. She's giving me a direct message. Logita did it. Can you? I did many times. Okay. Can you just leave the meeting and then come back? Leave the meeting and then come back. Okay. Shagna, she's saying that she did it many times, but still she's facing this issue. Might be. Mostly it is internet issue. Logita came back. Logita, is it fine now? Okay. Full value of consideration 31 minus even the video is breaking. Still, for her, the video is breaking. Look, that might be the internet issue at your end, because other students are not having this issue. Um, um, Either you can continue, or after a few hours when I'll be uploading it, you can watch the recording also. Are you able to access the recording? Have you tried it? Okay, you tried it. So as of now, it's, if it is a big problem at your end, you're not able to see it clearly, then you can leave. And after a few hours when I'll be joining, when I'll be uploading it on the drive, then you can watch it. Because I understand that if your video is not coming clearly, it would not be, you'll not be getting a good connection, right? Correct. I can see. Okay. Do you have laptop or computer also, Logita, by any chance available? Laptop or computer, if it is available, or try joining it from, okay. And if possible, try joining from, I have MacBook. Yes, you can use MacBook also now on this. Not for recording, but for the Zoom classes you can watch now. Just open your MacBook and try to do it, right? If you want it right now. Okay. And in fact, you can try it right now, because right now we are live, so it would be good. Okay. Now, guys, come back. So full value of consideration will be 31 lakh minus cost of acquisition would be, in this case, 10 lakh. No issues, Logan. 21 lakh is my capital gain. Now, the thing is that this capital gain would be long term or short term. It would be long term or short term, depends on the period of holding. It depends on the period of holding. Everybody has written it. Guys, period of holding only for the capital gain portion. Agree, na? In PGBP, we never see period of holding. There is no such concept of PGB in PGBP period of holding. So it is only in case of capital gain. So see, this period. So this period, it is long term or short term, it will depend. So this period, if it is long term, it would be long term capital gain. If this period is short term, it would be a short term capital gain. Everybody agree? So it depends on this period. It depends on the type of asset, 1 year, 2 years, 3 years, whatever it is. And if it is long term or short term, depends on this period. Everybody is okay with this? And here my PGBP would also be. How much is the PGBP? 35 minus 31 lakh. Four lakh PGBP. Tell me if everybody has done it or not. Very good. Okay, Shagna has a question. Good question. See, what is the transfer? See, we are actually, this is the transfer year, right? This is the transfer date. And this transfer date right now, see, we are taxing it in this year. We are taxing it in this year. We are just delaying the taxability. But the transfer happened in this year. If it's a long term and if it's a pre-budget period, Shagna, if it's a pre-budget, and yes, it is a pre-budget here. So if it's a long term, you have to do indexation also. Please write indexation also if pre-budget, long term. So you have to do the indexation also. So although it is taxable in this year, everybody got it? Joseph, Satish, Sudeepa, everybody got it? Everybody got it? Now, Lokita, now you are with your phone or laptop? Now, everybody got it? So it is indexation also if pre-budget. It would be long. And guys, you will text it over here, but the indexation would be done over here. Good. Shagna, is it clear now? Have you understood, Shagna? Okay. Guys, because there is so much thing in pre-budget and post-budget, so it is taking some more time in capital gain because I have to explain you all these things also. So this is what I was supposed to discuss in capital gain. There is also one more important concept of slump sale. That is a very, very important concept of slump sale. But today I'll not be discussing it. So I'll be discussing in the last class. Last time also in all the three workouts which I had taken last time also, I could not discuss slump sale in this class of capital gain. But yes, for sure, on the 10th class, I would be discussing the slump sale also. So I have to discuss with IFOS as well. But let us take a break also. I also need a break for 11 minutes. So we'll meet at after 10 minutes, 9:50 a.m. we'll meet, 9:50 a.m. And I'm writing it over here. Take a break and then come back. I'll be teaching for another 40 minutes or so after the break. I believe everybody is back. Yes, I'll be discussing some important points regarding IFOS. First, dividend. Please understand that if it is a final dividend, if it's a final dividend, or it is an interim dividend. Final dividend is taxable in the previous year when it is declared or received, whichever is earlier. So if it is declared in a previous year, let's say 23-24, and we are receiving in previous year 24-25, so please make it taxable in the year whichever is earlier. It should be taxable on declared date or received date, whichever is earlier. Interim dividend is taxable on receipt. Second important thing which you should not know about dividend is no expense is allowed from dividend income. No expense is allowed from dividend income except interest on loan. Except interest on loan, maximum 20% of 20% of such dividend. First of all, tell me, have you written this? Everyone, have you written this? Lokita, I was just telling that there are two types of dividend, final dividend or interim dividend. So final dividend is taxable when the dividend is declared or received, whichever is earlier. So if it is declared in some year, it is received in another year, whichever is earlier, please make it taxable. Interim dividend is taxable only on receipt basis whenever it is received. And the second important point which I am telling about dividend is important note, from dividend income, any expense is not allowed. There is no expense which is allowed except interest on loan, maximum 20% of such dividend. First of all, tell me, everybody has written it or not? Good. This is a very important concept. You can expect a question from here. It's an important concept. Very good, Satish, Joseph, Sudeepa, sure. Example. Dividend received rupees 2,50,000. Loan taken for investment in shares. See why we have received dividend, because we must have invested in shares. Loan taken for investment in shares, rupees 20 lakh at rate of 10% per annum. We have taken a loan for investment for investing in these shares, 20 lakh at a rate of 10% per annum. Bank collection charges, rupees 2,800. Solution. See, IFOS income would be the IFOS income would be dividend income dividend income 250. There are certain expenses, bank charges, no expenses are allowed from dividend income, zero, it will not be allowed. Interest on loan is allowed. The only one expense is allowed is interest on loan. If you have taken a loan to invest in these debentures, so you have taken an interest on loan, 20 lakh at a rate of 10%. 20 lakh at a rate of 10%. It is 2 lakh. But maximum 20% of dividend. This is important. A or B, whichever is lower, you can say 20% of such dividend. So such dividend is 250. 20% of 250 is 50,000 rupees. Whichever is lower, 50,000 rupees you will get the deduction, and 2 lakh is your IFOS income dividend. Everybody has done it and understood also or not? So this is an important concept regarding dividend. Interest on loan this much. Second is second concept regarding IFOS is family pension. Family pension. See, family pension is IFOS income, and the deduction available is if you are following optional regime or you are following default regime, the deduction available is from optional regime, it is A, 1/3 of such family pension, or B, rupees 15,000, whichever is lower. In default regime, it is 1/3 of such pension, family pension, or rupees 25,000, whichever is lower. So the difference is here, 25 and 15. So this is an amendment this time also. This time it was amended. Earlier it was 15,000 for everybody, but for default regime now it has increased to 25,000. Example. So in your question, if you get family pension is rupees 90,000, and let's say you are following default regime. If you get in your examination, family pension is 90,000 and you are following default regime. So how you should do this? Solution. IFOS income 90,000 minus 1/3 of 90,000, 30, or rupees 25,000, whichever is lower, 25,000. 65,000 is your IFOS income. Let me know what's done. Let me know what's done. Very good. Now, third is interest on delayed compensation. Interest on delayed compensation always taxable on receipt basis. What does it mean? So let's say if in your question they are telling you that the assessee has received interest on delayed compensation because his asset was compulsory acquired and now he is receiving interest. So this interest belongs to this year, this year, this year, 1, 2, 3. But it has received in fourth year. So please make it taxable only in fourth year. Doesn't matter to which it belongs. So it is always taxable on receipt basis. And second important thing is, I believe everybody knows, is there is a flat deduction of 50% of such interest. Only related to this interest, right? Not for any other saving account interest, FD interest, no. Only related to this interest on delayed compensation. This is the only deduction available, 50% straight away. So if we have received 5 lakh, straight away 2.5 lakh would be the deduction. I believe you must be knowing it. Please remember, this is an important point. A very, very important point. Fourth point, interest on post office saving account. If you have a post office saving account, let's say example, interest on post office saving is, let's say, 20,000 rupees. For example, you will get this interest on post office saving is 20,000 rupees. If you are following optional regime, if you are following default regime. So IFOS income would be from post office, not for any other saving, only for post office. post office saving, 20,000 minus 3,500 is the exemption available right here in IFOS. When you will make it IFOS, please remember this fixed amount. This is a fixed amount. It is fixed, 3,500. Subtract it. So please make only 16,500 under both the regimes. So you have got 20,000 under both the regimes. Make it your IFOS income only 16,500. 20 minus 3,500. And very rarely they will ask if this is a joint account. In case it's a joint account, then fixed limit is double, 7,000. So please remember 3,500 or 7,000. If it's a joint account, 7, otherwise 3,500. So please don't forget to make your IFOS after this 3,500 or 7,000 as the case may be, mostly 3,500. This is your IFOS. Now let's say this is your GTI. Add some other income also. Let's say this is your GTI. Now, because it is saving account, so although this is a part of chapter 6A deductions, but you will get 80 TTA or 80 TTB. TTA is maximum 10,000, TTB is maximum 50,000. So I'll be telling you in the chapter of deductions, although I have told you earlier also when I was discussing the first chapter, TTA and TTB. So it is allowed here and it is not allowed here. So let's say after TTA, what is TTA? Saving account interest, 16,500 or 10,000, whichever is lower. So probably TTA, if you are taking 10,000, 6,500 will become your income. But here, no 80 TTA, TTB. If it is TTB, TTB is on other bank interest also, including saving, but it is for only resident senior citizen. Only for resident senior citizen, it is maximum 50,000. So if you are following optional regime, TTB, this amount of 50,000, whichever is lower, 16,500, in that case, it will become nil. But here it will always be 16,500. Why? Because there is no TTB, TTA or TTB. Done. So the only point is that please remember this. See, if it is other than post office saving account, bank account or other account, then 3,500 would not be there, right? 3,500 or 7,000 would not be there. But yes, TTA, TTB would be there in optional. In default, it will not be there. I believe everybody has done it. Say yes or no so that I can proceed. Very good. Very good. There is a very important concept in IFOS, deemed dividend. Under section 222E. Under section 222E, this is applicable only in case of unlisted companies, or I can say private companies. So whenever you see ABC Private Limited, private companies, or I can say unlisted companies, private companies, or companies where public is not interested, is not substantially interested. All in all, private companies. All in all, private companies. So we can call it them unlisted companies. This section is not applicable for listed companies. No. Any company where public is interested. No. For public is interested means it's a listed company. So it is only for unlisted companies, for private companies, or company where public is not interested. If there is a shareholder who has 10% or more shares, who has 10% or more shares, and if we take loan from such company, it is considered as a deemed dividend in the hands of shareholder. If we takes a loan from such company, it is considered as a deemed dividend in the hands of shareholder. Guys, leave 2-3 lines here. Leave 4 lines here. 4 lines here. Tell me, have you written this? Good. Good. See, what happens is, leave some line, 4-5 lines. See, let's say, for example, Joseph and Satish. Joseph, don't write it, just understand it. Let's say Joseph and Satish, they make a company. They make a company. For example, JS Private Limited. They make a company, JS Private Limited. Unlisted company, private company. And they both are 50% shareholders. They were initially having their individual business. Initially having their individual business. Now they came together and they said, okay, let us make a company. So they make JS Private Limited. Now, it's this balance sheet of this company, and where there is equity share capital. There is share capital, whatever the number of shares, and Joseph and Satish has 50% ownership. Even if you have 10% or more ownership, this section will apply. Now what happens is, if this company earns profit, company will pay tax. They're 30%, whatever it is. Company will pay tax, right? Company means indirectly they are paying, but yes, company will pay. But now they have profits. Let's say there are some profits. For rupees, for example, 12 lakh. And now they want to take this money out from this company. So what company can do is, so this company has 12 lakh rupees. This company belongs to Joseph and Satish. They are 50% owner, let's say. So they want their money out from the company. So the company will pay them dividend. 6 lakh to Satish and Joseph. But we understand that it has become taxable in the hands of Joseph and Satish as IFOS. So whenever we receive dividend, you all know that dividend income is taxable. But they don't want to give this much tax, but they don't want to show this as a tax. This is, they are of the view that our company has already paid tax. Now we are actually pulling the profit from our company. But yes, there would be a dividend. It is a dividend in the hands of Joseph and Satish. They would like to manipulate this. They would like to manipulate it. So what they will do, they will actually take a loan from this company. They want to take the money out from it. But if they will take dividend, they say, then they have to pay tax. So what they did is they take a loan. This company now gives a loan to Joseph and Satish. Let's say 6 lakh, 6 lakh. So this section 222E is applicable if this company is a private company, unlisted company, this company where public is not interested. It can't happen in public limited company, no. So it is only for unlisted companies. If any of the shareholder who has 10% or more share, even 10% or more, if they take a loan, guys, what will happen? They have taken a loan, 6 lakh, 6 lakh. And guys, what do you think, that they would be repaying this loan to their own company? No, nobody would be asking this money back from them, right? See, what is loan? Loan is when you take the money and you have to pay it back. Why you pay it back? Because that lender asks the money. See, let's say if I have taken the money from you, then after a few days, a few months, you will ask, "Na, sir, please give this money back to us." But from them, who will ask? It's the company they will ask. Company belongs to them, or to them only. So nobody will ask them. So this is an point where people were doing manipulation. They were taking this dividend out, but they were not saying it as a dividend. They are saying that we have taken a loan. So this is duly covered under section 222E, that yes, it would be your dividend. It would be your dividend and it is taxable in your hands. So today, whatever the amount they withdraw, to the extent of profit, So let's say if they are withdrawing 6 lakh, 7 lakh, 8 lakh, 9 lakh, 10 lakh, 12 lakh also, so it would be their dividend income. But if they withdraw 13 lakh, then only to the extent of profit, 12 lakh would be their income, not more than that. So this is actually a section which is applicable only on unlisted companies. You should know it. And any shareholder who has 10% or more shares. Now, let's say for example, I am also a shareholder over here and I have 9% shares. And if I take loan, then this provision would not be applicable on me. Why? Because I don't have 10% or more shares. Everybody understood this? Everybody understood this? So today, if Joseph has, let's say 10% shares, 20% share, 30% share, whatever share he has, if it is 10% or more, this provision would be applicable on Joseph. Now Joseph know that if I'll take a loan, this provision would be applicable. He asked his family member, he asked his spouse, his children, his brother, sister, that you take the loan. You take the loan. Then also this provision would be applicable. Or let's say, for example, Satish is a partner in any firm. Let's say Satish is a partner in any firm. And now Satish is not taking the money, but his firm is taking the money. Then also provision would be applicable on Satish. So if Satish is a partner in any firm or he's a owner in any particular business where he has substantial ownership, in that firm, Satish or Joseph has a substantial ownership. See, here they are shareholder of 10% or more. But if any concern in any business, you have 20% or more ownership, and if that concern takes a loan from this company, then also this provision would be applicable. So please write, loan taken by either self or family. Family here means spouse, children, brother, sister, and parents. If the loan is taken by self or family, or any concern, any other concern, any other concern is taking a loan, any other concern where such shareholder, what is such shareholder? Who is 10% or more owner in our company, where such shareholder has substantial interest. Substantial interest is 20% or more owner. Then also this provision would be applicable. So if you take a loan, or any of the family member takes the loan, or any concern where you have the substantial interest, that concern takes the loan, this provision would be applicable on you. Have you understood this? This is an important section. Guys, please remember, it's a very easy section, but you should know about this. It's a very easy, but you should know about this. This is one of the, again, favorite of the examiner, 222E. And note, this provision is not applicable this provision is not applicable if the company is in the banking or money lending business. So if the company itself, this company itself is into a banking business or a money lending business, then you can take a loan. Then this provision will not apply. Then no deemed dividend. Understood? Understood? Guys, there is a new section which came this time. It's a very small thing, but since it's an amendment, I would like to cover. It's a new section which came. Section 222F. It's a new section which came. Section 222F. This came from 1st October 2024. This came from 1st October 2024. It's a mix of IFOS plus capital gain. It's a mix of IFOS and capital gain. It's a mix of IFOS and capital gain. I'll explain you this section with the help of example. So let us write the example. Since it's an amendment, that is the reason it became important. Example. Mr. X purchased 200 shares of IFOS Limited. Mr. X purchased 200 shares of IFOS Limited at a rate of 60 each on 1/5/2023. He purchased 200 shares of IFOS Limited on 1/5/2023. The company bought back. This is buyback. Actually, this provision is related to buyback of shares. Please write this provision is related to buyback of shares. The company bought back these shares at rate of 75 each on 1/4/2024. Now guys, solution text treatment. Today, what is the text treatment today? No, I should write the date. The company bought back. I should change the date. If this will come, it would be after October, 1st October 2024. 1st October 2024. Correct. Now, the text treatment would be now how much is the company paying? Guys, it is like previously what it was like that we have purchased the shares. Now we are selling the shares. Actually, to whom we are selling the shares? To the company itself. The company is buying back the shares. So company is buying back at 75. Previously, the thing was it used to be a capital gain. How? That we are actually selling the share. We are getting 75 rupees for each share. And we have purchased it for 60. 75 minus 60, 15 rupees should be the capital gain. Agree? Why? Because the company is buying back. The company is buying back. In other words, I can say that I am transferring these shares. Everybody is agree with this, that Mr. X is transferring the shares to the company itself. The company, see, I would have transferred the share to somebody else for rupees 75. Now, right now, I'm transferring it to the company itself for rupees 75. Everybody agree it is a capital asset shares which are being transferred? Yes or no? Can we say it's a transfer of capital asset? What is buyback? The buyback is that I am surrendering my share, and for that I am getting the money. It's very, very similar to that actually I am selling my shares. And to whom I am selling the shares? None other than the company itself. None other than the company itself. So you all agree it is a kind of transfer, right? See, if I would have told you that this person has sold the share for 75, you will say that actually, sir, it's a sale. It's a capital asset transfer. The same way I'm saying the company bought back. See, if you are making a sale, so somebody would purchase now. So who is purchasing? The company itself. It should be a capital gain. But now what they did is they said, no, they have. Now, today I'll not be telling you the logic behind it, but you should know that this is a kind of section which we have now. So now the text treatment is that the money which you receive, how much money you receive? 75 into 200. The money which we receive, 75 into 200. $15,000. This is considered as IFOS income, deemed dividend. And they have inserted a section 222F. They have inserted a section 222F. Whatever the money which you receive is your deemed dividend, IFOS income, a new section which came 222F. Now the assessee will say, sir, what will happen to my 60 rupees? I have actually purchased it. What would happen to my cost? 200 into 60, 12,000 rupees I have actually spent it. What will happen to the cost? Now, there is a simultaneous amendment in the buyback section. The buyback section, not very important section, but still I'm quoting. There is a simultaneous amendment in section 46A. This is one of the section of capital gain. It was not at all an important section, but now because of the amendment, it became important. So there is a simultaneous amendment they did. So they made amendment by inserting this section 222F, and simultaneously they made an amendment in 46A. They say, now we will give you the benefit of the cost also. Full value of consideration. Whatever the money we have received is not full value of consideration. Now it is deemed dividend. So full value of consideration would be zero, nil. It means that the money you received is not for the shares, it's a dividend. The money which you receive, it's not for the shares, it's a dividend. And you surrender your shares and you didn't get anything because of the shares. Your full value of consideration is zero, minus your cost of acquisition was 200 shares into 60 rupees each, 12,000. So this will become your capital loss. This will become your capital loss. So this is, guys, there is a logic behind it, but if I'll tell you the entire background, it will take half an hour. So I don't want to go into that. So right now, just for the examination purpose, please remember this. Maximum example which you will get is this. Maximum example which you will get is this. That he has purchased the shares. Now the company is buying back. If you see anything which is related to buying back, please remember this section. Now there is a section 222F. And guys, I'm sorry, I'm not able to explain it right now because we don't have time. Had it been a fast track or any other batch, I would have definitely explained you. Because it has a big background behind it. But right now, please, for your examination purpose, take it till this much. This would be more than enough. You would be writing it, you will be getting the full marks. So money received. So today what will happen is, see, whatever the money received will become your IFOS income deemed dividend. It is taxable in the hands of shareholder. And because since his shares are also no more, there is extinguishment of right. He does not hold the shares now. There is a transfer also. But how much he received for the shares? For the shares, we will say zero. Cost of acquisition would be 12,000. Capital loss would be 12,000. You can set off or carry forward these losses. Understood this section or not? Everybody got it? I will not ask understood or not, but please, everybody is now aware of this section now, 222F. Correct. So whenever this question you will get, no, earlier it was before 1st October. Now they will not ask you before 1st October. They will only ask you after 1st October. So earlier there used to be 20% tax. Now there would be no such thing. It will be simply a deemed dividend. It will be simply a deemed dividend. Understood? Okay, not understood, but still aware. Guys, there is a section which I would like to discuss, but today I'll not be able to discuss. Two things: slump sale, I will be discussing in the last class, and probably 112A. I didn't get time today because of so many amendments in capital gain. I didn't get time to cover 112A. Otherwise, this is also important. Please do remind me at least till the last class. At least in the last class, I'll be doing this also, 112A. Last class I would be keeping a little bit free. We'll not be discussing many questions, but there, whatever is a pending thing, I will be discussing. Whatever is pending, which is important, I'll be discussing there. Slump sale for sure, 112A for sure. For your homework, so in case you find 112A in your homework, so you can leave it if you don't know it. If you know it already, then you can do. If you don't know it, then you can leave. Yes, question number 9, 10, and 11. Please do send me your homework 9, 10, and 11. 9, 10, and 11. And guys, the things which we have discussed today, 50C, 50CA, conversion of capital asset into stock in trade, these things in IFOS, and pre-budget, post-budget, these things are very, very important. If you know these things also, you would be in a very comfortable position. Please complete this question 9, 10, and 11. And tell me, are you able to understand those two questions which I have sent you the explanation video now? Because some students were messaging me before sending those videos, they were not able to understand. Now everybody understood those questions. Correct. And don't worry about it because they have connection with total income. So that we'll be doing in our total income also. So don't worry about it. So once we will be starting with the total income thing from day 7, you'll be feeling very comfortable in it. Okay. So let us keep it till here today. So we'll meet tomorrow Sunday. We'll meet it. We have the class tomorrow also. So same time 7:30. Bye and take care. Do your homework. Send the homework to me.